And we're live. It's serious. I'm taking my jacket off. Real Estate Exposed. Phil Tarrant, Tom Panos. Thomas, how you going?
I'm very good, Phil Tarrant. I'm very good. Hello to you from your offices there in REB at North Sydney. Looks like you got a lot of your team back in the office today there.
They're coming in. There are plenty of journos here. We've got the hustle and bustle of the home of content, business journalism in Australia here at Momentum HQ. Tom, they're all there. They're hungry, the journos. Me and you were just having a chat offline with Grace Ormsby, editor of our real estate platforms here at Momentum Media. I'm happy to report that this podcast, not only live across Real Estate Gym and REB, podcasting simulcast simultaneously across real estate business and smart property investment, Tom. So we have the ears and the eyes of the business community, real estate, the engine of the real estate sector, but then also property investors right across the nation, because the big question that we want to ask today, and the question I want to ask you, and no doubt all of our listeners who are tuning in and our viewers for tuning in, send your comments through. How much will rates drop in this downward rate environment? We know, Tom, this week, Tuesday, the RBA lifted the official cash rate by another 50 basis points. Expect more to come. The read I'm getting, the mail I'm getting from people I like to think are in the know is that you're going to get another 50 next month, another 50 the month after, and another 50 in November. So this upwards rate environment ain't going away. What is going to be the impact on real estate values, Tom? That's what we're going to try and uncover and unpack today.
Yeah, so that's what you're hearing when you're out and about, is that Phil talking to people that work heavily in the banking sector. So Luke Moroney, who's always telling people to buy, is basically saying he can't see rates getting over 3% from the RBA. So, but by the way, everyone, because some people actually get very confused with this cash rate, because on the one hand we talk cash rate, but in reality, what people are more worried about is, hey, what's the interest rate I'm paying? Phil, it's roughly 2% more. Roughly, you add 2% to the cash rate. So when they turn around and say the cash rate's going to be 3%, your interest rate's going to be, 5%. But Phil, it's the reason I brought this as our banner on the bottom of this video stream. Those that aren't watching, that are listening to the podcast, it says, how much will homes drop? The reason I've got that up, it has to be, even now, many months later, the most common theme I'm asked on a day-to-day by both the real estate industry agents, but also by consumers, right? They obviously care about it, obviously, because a lot of people's wealth is in their family home. A lot of people's wealth is in real estate, be it family home and investments. And Phil, as I was telling you offline, every time I see an article that says we believe homes are going to drop, they say it in such a way that they're assuming that they haven't dropped already. And the reason why is that most people, that is a data scientist, an economist, the spokesman for a bank, they're using data and they're looking at spreadsheets. And those spreadsheets include numbers that have got a fair bit of a lag on them, Phil. It's not like, in the share market, in a moment, you can actually see what the share price of Commonwealth Bank is today, right? But in real estate, data lags. By the time it's reported, it goes into the various data houses. Sometimes there's no reports. You've got to wait for a solicitor to lodge titles, to lance titles. Then they appear on things like CoreLogic RP data. But if you were to sit there and talk to our industry, the people that are sitting there doing offers and acceptance, the people that are at an auction, they're able to tell you, hey, man, it's dropped 10% or it's dropped 5%, or this property, you know what? I would have got 1.5 million for it 9 months ago, and now I'm getting 1.3 for it. They're a very good barometer. Speak to the agent in a market, because the other thing that the agent's got, Phil, is the ability to tell you what's happening in one small geography. And that is something that a lot of economists can't give you. And it varies, Phil. I can tell you, I can drive half an hour and I can go to a market that has had far less pressure on prices than the suburb I was 30 minutes away. So there's not one market. There is thousands of sub-markets, Phil.
Oh, that absolutely is, Tom. And essentially we have two audiences for this discussion today, Tom. Real estate agents, property managers, those people that serve as vendors, buyers, tenants, etc. Then we have property investors who are out there trying to make a buck through property investment. So considering that, Tom, through the lens of data, if you're making your investment decisions or you're making your listing decisions based on the data you have today, you're only seeing one side of the coin. You're seeing a very small part of it, actually. I remember back in the day on Smart Property Investment, Tom, which now, as you know, one of the top rating podcasts hosted by me, always get a lot more traffic than yours, Tom, my podcast. But back in the day when it was a print magazine, you used to watch people, right? You know, they go to the newsagent, they pick up a magazine, they'd flick to the back pages. Remember when all the back pages used to be full of like 20 or 30 pages of data? They'd look up a suburb and go, yes, that's where I'm going to invest. What they don't realize, how old that data is, number one. And number two, what they don't realize is sometimes how skewed data can be, because data only tells one part of the story. You do not know if you're looking at medians, if you're looking at average sales prices or time on market or whatever. There are so many little myopic details which can change that data considerably. Now, for example, if you I'm looking out the window here. I'm looking at Mossman over in the Northern Beaches, where I don't know what the average price of real estate is there. If someone built a apartment unit there with 50 apartments and they all sold in 1 week or 1 month or 3 months, that's going to absolutely skew the median average price, or the median or the average price of property in that suburb. Unless you know what's happening, unless you've got the ground truth, you cannot put a story or a narrative to the data. So at least 3 months old. And hence the reason why, Tom, I ask you every single time, how did you go on the weekend? What's going on? What's happening on the street? What's the street talk right now? What are you seeing? What are you hearing? What are agents saying to you? What are buyers saying to you? What's the sentiment? It's the immediacy of real-time data which can help you shape and frame not only investment decisions, but if you want to be a good agent, you know, how you can most effectively sell property for your vendor in a market that's in change.
Yeah, spot on. And I know that you do seek out those results, and smart people do, because I think the average person opens up the Telegraph or the Herald on a Sunday, has a look at the property section. 9 out of 10 times, there's a story about some deceased estate that's been sold for $500,000 over reserve. That's normally the story that you see that's covered. And what's not covered is the 675 other properties that sold or didn't get to reserve, right? That's not covered, right? So what you're doing is looking at a true sample size. But Phil, I've said to you that, and I've said it over the last month or so, that at the moment, I'm seeing prices have reduced, but I'm also seeing not a hell of a lot of listings on the market, which maybe is protecting the magnitude of the drop that may have happened if there was more stock on the market. But there's no forced sellers. No one has to sell, right? And the most common thing you hear from vendors that don't sell at auction, they say to me, but Tom, we don't have to sell. Whereas there have been other times in my life where people say, I'm not happy, but I've got to sell. Just sell it.
Yeah.
They're not selling.
We spoke at length about this last week, Tom, that psychology. And in many ways, that's the supply and demand equation. If people don't need to sell, therefore it puts some stability into the marketplace. But I think you put up a quote earlier on. I think it was around what Christopher Joy is saying.
Christopher
Joy Capital. He also writes for the Friend Review, showing high drops in expensive markets over affordable areas in Sydney. I follow his column. He's a bright guy. And if you're not following what he's writing, he typically gets real estate pretty right. Got it pretty right through COVID. I think we probably got it more right, Tom, but, you know, it's not a competition. The challenge that we're in, or this market that we're in right now, is everyone's talking about price drops. To your point, it's already happened and it's happening, but how far will it go? And I'm getting a lot of good commentary coming out. There's the census data that's come out recently, some really good considered opinions from the Reserve Bank, I think the Deputy Governor, around why property and why they're comfortable and confident to continue rising rates based on macro and microeconomic conditions in Australia. You spoke about people not having to sell. That she talks about the inherent savings that a lot of Australians have. As family balance sheets are as strong as ever. They're going to be ratcheting out. They're going to keep ratcheting up the RBA, the official cash rate, until it gets to a point where it starts curbing spending in line with the changes that we're seeing right now in inflation, Tom. And this is not about an inflationary podcast or an economic podcast. It's about the impact to property and what you do about it, whether you're an agent or whether you're a property investor. So how far a property is going to drop? Well, the big question is, Tom, how much does that matter? If you're not selling a property, does it really matter how far property drops? And if you look back, and if you're a student of history, and there's some really good articles coming out around this, you always see the return to price points after drops. And I don't think what they're predicting right now are these drops of 20 to 30% in property in Australia in this market cycle. I don't think that's ever happened before. The maximum drops you're getting is sort of 10% at an aggregate level. So if you're not selling, does it really matter if your property price drops?
No, it doesn't, Phil. It doesn't. The only people that are impacted right now from a financial perspective is people that were selling a property and were not going to be reinvesting the money into real estate. Example, the deceased estate being sold, money's going to get dispersed to the beneficiaries, and maybe they would have got 100 grand more if they'd sold 6 months ago, right? They get financially impacted. Or the family that's going through a divorce and people are going to sell the house and they're both going to go rent, right? And they're not reinvesting. They're the impact. But Phil, I will say that one of the things you're going to have to take into account, and this is something we've got to be mindful, roughly the formula on borrowing is that for every 1% increase, right, you get a 10% reduction in borrowing capacity, right? This is something that's factual. It's got nothing to do with mood and sentiment. It's basic mathematics, and that's the way the banks operate. So
yeah, it's just your capability to borrow money is reduced because interest repayments are higher. It's a pretty simple equation.
Yeah. So if you're a buyer at the moment, one of the things that's going through your head is, hey, if I wait, maybe I'll buy something cheaper if I wait. However, you also need to take into account the longer you wait, the lower they're going to lend you. And think about this, Phil. A 2% increase means that your borrowing reduces roughly by 20%. And that can take you from wanting to live in the inner city to wanting to make you live in the outer west. And you're really banking that property prices are going to drop to a level that allows you to still buy a property with the reduced amount that you're given. And I'm not quite sure that's going to happen, particularly when I've already seen in parts of Australia, Sydney and Melbourne. And to answer this question from Leithvo, he says from YouTube, CoreLogic says dwelling values are down around 5% from the peak. Is this accurate? I think it's not accurate. I think that maybe when RP Data adds all their numbers up and includes the $50 million sale that took place in in Double Bay or Point Piper, that what actually happens is the numbers get skewed. But if you were to look at typically Sydney, Melbourne, it appears when you talk to real estate agents, it's 10 to 15% already, roughly 10 to 15, particularly certain kinds of properties in those areas. So, Phil, it's going to be very interesting. What happens over the next few months. But for those that, sit there and watch this because they're trying to use the information that you and I and other people that talk about to make decisions on real estate. You don't have to stress that much, because like if you get it wrong by 5 or 7% over a decade, that 5 to 7% means nothing, right? It means something if you plan to actually buy a home in 22 and sell it in 23. Absolutely it means, because you don't have the time for your error to be amortized in the growth over the decades. But
well, I think maybe this is, I know there's a whole bunch of buyers agents tune into this discussion, Luke Moroney being one of them, Tom. There's different conversations for different audiences. Now, if we're chatting them at the moment, we're chatting to property investors. It's a very, very different set of rules or set of outcomes that they're playing by or looking to achieve versus owner occupiers, Tom. And I would say it's a bit more forgiving if you're an owner occupier buying in this particular market. If you overpay by 5% for your dream family home that you're going to hold on for 40 years, you know what? In 40 years' time, when you choose to, when that becomes a deceased estate, your kids probably aren't going to complain too much about the price growth that's happened there. So it's a very, very different mindset around that. For property investors, though, 5% means a lot, Tom. 5-7% means a lot. So you've got to be really clear about what you're buying in this market and why you're buying it in this market and where you're buying in this market. Now, I know a lot of property investors waiting in the wings to see what happens in Sydney. They may see this as the opportunity to get back in the Sydney market, and that happens in every single cycle. There's points in time where property investors flee Sydney because they're just not getting the return on their capital investing in this market for the upside around capital growth. So they're waiting in the wings. They're waiting the strike. It's when you choose to do that. Do you get in early on the downward cycle, or do you wait till you think you pick the bottom? If you're a property investor with a 10-year horizon, a lot more forgiving. But if you're looking to buy and sell and transact, or manufacture equity and transact, you got to be really smart. You got to be Johnny on the spot, and you're operating in an environment that is moving so fast that irrespective of how planned and prepared you are, let me tell you what, you're not going to get it perfect. You're not going to get it perfect. And if you place that philosophy, you'll be okay. But if you're betting the family farm on a real estate transaction as a property investor right now, playing the game and thinking you're going to get lucky, maybe a sense towards a more conservative approach is appropriate.
Yeah. Well, Phil, I know we're on a timeline today. Just for your own info, Phil, real estate, forget about rates, forget about economy. In terms of seasonal, best time to actually buy a home is December. Best time to sell a home is January. Why? December, there's a lot of residual stock that's trying to get sold before Christmas. Buyers are at Christmas parties. They're at Westfield. They've already started their vacation, and you can snap up a really good buy. Why do you sell in January? Because there's no homes on the market. Everyone's waiting to put their home on the market after Australia Day as part of the auction process, and people coming back from their summer vacations. So in a matter of a 2-month period, we have the best time to buy and the best time to sell.
So on your typewriter there, Tom, if you can put into the green bar here, spring selling season slump 2022. We've got 3 minutes. Let's have a chat about that. Is this going to be the most dire spring selling season in the history of Australian real estate? Put you on the spot. Loaded question. You like that?
You've put me on the spot because it takes me time to write up the banner.
Well, you talk about you can write up the banner. It's good. It's good for the optics. But Tom's talking about when to buy and when to sell real estate. Personally, I've got some cracker deals in December where I've rocked up at auction, and I was the only person there, only a handful of 2 people there, and giving auctioneers a hard time, which is what I like to do. And auctioneers typically around December want to get out of there also to their Christmas party, so you can get some real good deals there and buying there. Is spring going to be a bargain time for buyers?
I think it's going to be. I don't know, Phil. I don't know if it's going to be bargain, because I can pretty much tell you I can't see in the next month or so vendors saying, "Oh, we've got to sell, just sell it." They're not even remotely saying that now. But is it going to mean that you're going to get a better opportunity? Absolutely. Why? Because you're going to have more to pick from. You're going to be able to go, it's basic demand, supply, economics. You're going to be able to choose more on, and you're going to be able to put offers in, and you're going to see whether they're going to accept it. But I've got to tell you, I'll tell you one thing I've noticed. The bargain hunter often ends up with no property in real estate over all these years.
Well, answer this, Tom. What's a bargain mean in real estate in this market?
10% or more less than what was expected to pay you thought at that particular time. I think 10%. I think 10%.
Yeah, and to your point also, why would someone sell a property 10% under its market value? There's normally some element of coercion or some pressure associated with that. And how do you even find those properties? Is everyone else chasing the same bargains? How do you get an advantage around it? This is when I know property investors are pretty well hooked up with agents, so they can make sure they're getting a heads up on these deals before anyone else. That gets a bit tactical, Tom, but signing off in a moment. Final question for you: what's keeping you awake at night in real estate in Australia at the moment? Or you sleep like a baby, irrespective?
If I have a coffee after 6 p.m., I have a problem sleeping. I'm not having many other problems. I have to tell you, Phil. I've just learned. Maybe it's 55 years of age where you realise when things are good, they're not going to stay good. When things are bad, they're not going to stay bad. So often you find that you actually don't get too connected to a current situation as you get older because you realise it's temporary, it's fluid. Look, I do get stressed a little bit now on a Saturday, Phil, because auctions that used to take 5 or 10 minutes are taking 25 minutes, half an hour. You've got to get around Sydney to sort of do all these auctions, but they're taking a lot longer.
Why don't we speak to some aviation people, Tom? We can get your helicopter for the Saturday, fly you around.
Well, I've done the halfway step. Phil. I had a driver, and I actually found that more stressful because I'm not very good sitting in the passenger and having the driver take me around. So that lasted 2 Saturdays only, and I actually find it extremely useful having my agent auctioneer pre-auction meeting as I'm driving there, because as I'm driving there, the agent has normally had that final conversation with the vendor, and he's able to tell me where the vendor's at. They're able to tell me on the phone, put in a vendor bid of this much. And also, if I get there only 5 minutes before an auction, they pretty much know how many registrations they've got. So it's actually a really good time for me to be talking to an agent. And I don't like...
Maybe I can come out and caddy for you, Tom, on a weekend and drive you around and let you do what you do.
Why don't I drive and you sit in the car with me and that way I won't be stressed, and you can sit there and you can listen to the behind the scenes conversation. Oh, when should we start the bidding? Like, what's the lowest number we're prepared to accept? And what will the vendor bid be at? And if
maybe, you know what, Tom, maybe we need to do a special real estate expose where we stream for a Saturday. Go behind the scenes the whole way. If people want to do that, and I can just pester Tom for a whole day, just pester him, Phil
and Tom.
Yeah, that'd be quite good fun, Tom. Maybe we'll do that.
Oh, listen, I'll tell you what would be even more fun: getting the camera in and listening to some of the conversations you're having with vendors. I find that fascinating. You know, I really do, because emotions are sky high. Emotions are sky high. You know.
There we go. Yeah, real estate exposed on the road. Alexander Reddy, he just transacts some real estate. Friend of mine. Hi, Alexander. I like it. I don't mind that Caddyshack thing as well. I think it'll be a bit more like that. Don't know who the golfers are. GoPro. Yeah, GoPro it up. Mate, we get wired in. Unscripted, uncensored. We'll probably get chased off the internet, no doubt, Tom.
All righty. Guys and girls, I'd love you to tell us in the comments box, whether you're on LinkedIn, Facebook, or YouTube, what do you think the drop is going to be in spring, if there is going to be a drop? Love to see that after all. Phil, absolute pleasure once again in a time of real estate where it's all happening. It's the talk of the town. You can be sitting down having a coffee. The next table, they're talking about real estate. They're talking about real estate everywhere at the moment. It's the hottest trending topic. And if you want to get more of it, Smart Property Investment, the podcast, particularly for investors.
Well, it's good, Tom. And what I would say around that, no one really knows what's going on. No one knows. The economists don't know what's going on. Phil Tarrant doesn't know what's going on. Tom Panos probably knows more about what's going on, but he probably still doesn't know what's going on. You got to remember, when you're making these decisions, like, collect as much information as possible, but you still got to be responsible and accountable for the call you make. Be careful who you listen to, you know.
All righty, guys and girls, signing off. Thanks a lot, Phil.
Thanks, Tom.